All right, so welcome back to the last segment of Coffee Cafe. We're going to start doing our adjusted trial balance, and then we're going to start doing our financial statements. So, step 7 and step 8 of the accounting cycle. So, let's first off, right? We've completed our adjustments yesterday. So, now we're going to go ahead and go through every single account because we're going to create a trial balance. Now, if you guys remember, this was the last trial balance that we did, right? It was the unadjusted trial balance. Now we're going to be doing an adjusted trial balance. So let's go ahead and get this started. So again, shortcut that we can do to save some extra time, because look at all of these little accounts that we have to go through. So quickest way is to make a copy of this exact sheet. So then when we do our adjusted trial balance, it makes it a lot more easier to just fill in instead of having to type everything out and then re-enter in formulas all over again, okay? And I want to keep the same mentality where we are going to use main accounts. So as you can see, blue is the main accounts and black are the sub accounts, okay? I want to keep this consistent because when we do our financial statements, instead of flooding them with so many accounts, it makes it that much easier to just sum everything up in the main accounts, okay? Now, in this case, right, we had a lot of adjustments. Therefore, we created extra accounts in the in throughout the adjustment. So we also have to include that as well, start inserting and maybe revising a few formulas. So with that being said, let's go ahead and make a copy of this. First, I would recommend you to delete your adjusted trial balance first. Okay. And you're going to say yes. Okay. And you're going to go ahead and go to your unadjusted trial balance. Right click on that tab. And then you're going to click on move or make a copy. Okay. And then with this, right, I want it to be above my income statement. All right. Make sure you click on this check mark here to make a copy. Okay, to create a copy, because if you don't and you continue to go on forth, it would look like nothing happened. All right, so make sure you click on create copy and click OK. Once you've done that, now you have your unadjusted trial balance and your unadjusted trial balance number 2. Okay, so with this, I'm going to go ahead and change the title here so then I know that this is the adjusted trial balance. Okay. I'm also going to make a change up here in the title because it's no longer the unadjusted trial balance, it's the adjusted trial balance. Okay. Date is the same, right? Ending on June 30th. Okay. So now let's go ahead and go through each and every single account once again to make those extra changes here. Starting with the bank, okay? Checking, we did make some changes in checking, right? We paid a few things, right? So in this case, what is my ending balance in my checking account?
$13,142.60.
Okay. So like I've mentioned before, if you guys did it exactly how I did it, we're going to be editing the black column. And then the blue columns is just going to be a summary of your black columns. Okay. So in this case, I'm going to go ahead and click here, and I'm going to change this to 13,142.60. Okay. Which, if you have the formula in there, it should automatically update your bank account. Okay, to 13,952.60. Our petty cash did not change. It's still $500. Okay. Our cash register in the drawer is still $310. Okay. Accounts receivable. Okay. Accounts receivable, as we know, is account right here. Now, here's something that we have to include now, because accounts receivable also now includes our allowance for doubtful accounts. Okay. Our allowance for doubtful accounts. So here we need to insert your sub account here, and we're going to create the formula in the actual accounts receivable account. So in this case, you're going to click on the business supplies, and you're going to right click and insert, and I'm going to make this one called allowance for doubtful accounts. Okay. And of course, this one needs to be black, because this is a sub account. Okay. And now the formula for accounts receivable is going to include this allowance for doubtful accounts. Okay. So in this case, right, my ending balance in my accounts receivable is 15,395. Okay. But I have a credit of 7660. So therefore, I'm going to create my credit account here for 7660. Okay. And what I'm going to do is, because that is a contra account to accounts receivable, your formula here is going to be your accounts receivable subtract out your allowance for doubtful accounts, because it decreases the overall accounts receivable account. So now you're going to have an account that reflects 145535. Okay. All right. Any questions what we did there? Because the main account is accounts receivable, we have a contra sub account, which is the allowance for doubtful accounts, which decreases the overall main account. So therefore, we have to add that 7660, and we have to take it out from my accounts receivable.
No questions from me.
No question.
All right. Business supplies is next, which, yes, we made a bunch of changes to business supplies because we had to adjust for the quantity of the cups and the amount of pounds of sugar that we had. So in this case, we're going to go to business supplies. First one we have is the the medium cups. We have 92 and 17 cents worth of medium cups. 92.17. Okay. For our large cups, how much do we have left?
$216.70.
$216.70. Okay. My sugar,
$21.60.
And last but not least, my creamer, how much do I have left?
$179.63.
Okay, 179.63, giving us a grand total of business supplies to be $510.10. Okay. So we went from a really high number to now shrunk down to a small number. Okay. Next account that we have is going to be office supplies, which we spent or we used a total of $70 worth. So in this case, my office supplies now is $80. Okay. Inventory, right? Let's see. Regular coffee is still $20.82. Okay. My Supreme coffee is still $134.65. However, we did our periodic inventory conversion entry. So now we have ceramic coffee mugs as part of our inventory. So that means we need to cram that account in there and we need to adjust the inventory account because now we have another inventory item in there. So I'm going to click on, let's see, is row 20 for the furniture. I'm going to insert this row in here and because this is the ceramic coffee mugs. Okay. How much was my ending inventory for my ceramic coffee mugs?
$386.12.
386.12. Okay. So now we need to readjust my inventory because now we need to include the ceramic coffee mugs. So in this case, I should have a grand total of $541.59. Opposed to my earlier, I had 154. Okay. Is everybody good here?
Yes. Yes.
Now,
Yep.
this is where we have to start inserting a bunch of accounts from here all the way to the end of vehicles because we have the accumulated depreciation account. So in this case, right after every single piece of furniture, you need to insert a new account for the accumulated depreciation. Okay? So that means I have to insert a row in between every single asset. So you need to have one in between the counter, you need one in between the desk, you need the one in between the display shelves, you will need one in between office equipment, right? You will also need one in between the printer. You will also need one in between the cash register, as well as equipment. So I'm going to just do that all now. So just go ahead and insert your rows there because we need to add our accumulated depreciation accounts in there. Okay. So let's see. We need one in between coffee grinder and vehicles. And let's see, we need one between the prepaid. And we need one for goodwill. So above accounts payable. So as we start filling in everything here, I'm just going to do shortcuts here because for your trial balance, you could do whatever you want to have. It doesn't have to be word for word. So I'm going to go ahead and just shorten it, saying this is Acct deep tables. Okay. You can list everything out now, and then we can go back through every single one to go ahead and compute those stuff there. So Acct deep counter, Acct deep desk, Acct deep shelves. Okay. You have the Acct deep for the computer. Acct deep for the printer. For the register, you also need an Acct deep for the brewer. Acct deep for the grinder. And the Acct deep for the truck. So this is where it's kind of going to get tricky because all of these are contra accounts, okay? They're all contra sub accounts to the main account, okay? Sorry, contra accounts to the sub accounts, right? We have the each individual item, and then we have this accumulated depreciation, which decreases your values. So in this case, this is where we're going to be tallying up our total assets or our total fixed assets, and we're going to be using fair market values. Okay, so this is where it's going to get a little tricky. Okay. Okay. Let me know if you guys are ready to start.
I'm ready.
All right, Kim, you ready?
Yep.
Okay. And Yinga, are you ready? Okay. So let's start with the very first accumulated depreciation, right? Because let's take a look. My bistro tables and chairs, they're still 6,605.08, right? But my accumulated depreciation that I solved for was for 78.63. So again, that's going to be on the credit side, 78.63. Okay? And then we'll deal with the formula in a bit, okay? So there we'll just go ahead, just plug in all your credits. We have our counter still at 1193.22. Okay? But our accumulated depreciation that we solved for was for $14.21. All right. Remember, we're making changes to just the black values, right? Because at the end of the day, when we do solve for our blue values will always be a formula. Will be either a sum of an account. Okay.
Can, what was that last part?
The blue parts are going to be all sums. They're all going to be added up values, where the numbers that we're going to be making changes to is just the black numbers.
Okay.
So we have 1421, right? Next we have is the desk set, which we know is the 65837, okay? And we calculated accumulated depreciation be $7.84. So $7.84. And the last thing that we have is the display shelves, right? Which were still 577.08, right? These numbers will not change. But the accumulated depreciation, which we calculated, was $6.86. So $6.87. So this is where we need to modify our furniture account, because now we have a total sum of what they are now, but we need to get the fair market value, because the accumulated depreciation will decrease the value of this. Now there are many ways that you can do it, right? Right now I have an equal sum going on. Okay, this is what you have to do, or this is what in context, right? I prefer, because sometimes if I do equal sum minus an equal sum, sometimes it doesn't work. But yes, what you're going to do is you're going to add up all of your main account, or I'm sorry, your sub account, so all the furniture items, and then you're going to subtract out all of the accumulated depreciation accounts. So in this case, right, I can do it one at a time, that's what I'm going to do. So I'm going to start off with my 605 tables, and then I'm going to subtract out my accumulated depreciation for that. I'm going to add my counter, but I'm going to subtract my accumulated depreciation for that. I'm going to add my desk, and then I'm going to subtract out my accumulated for that. And then I'm going to add my display shelves, but subtract out my accumulated for that. Okay. Again, you could do equal sum your debits, and then minus out equal sum your credits. Again, that formula is very complicated. There's room for lots of errors. So this way, it's simple enough that you're understanding that you're getting your furnitures, right, your debits, and you're subtracting out your credits because they're your contra sub accounts. Right? And what's the grand total here for furniture?
I got 8,926.20.
8,926.20. Good. So comparing this to your unadjusted trial balance, right? Let's take a glance real quick. Don't do it. I'll show you. So here, for furniture, I had a total of $9,033.75 compared to now it's only $8,926.20. Accumulated depreciation, right? This is the fair market value for these items, okay? This is what they hold their stand now, right? If you guys remember, when we did our depreciation tables, we created a column, or we calculated their book values. These are their current book values as of June, okay? And basically what we're doing here is we're tallying them up, okay? There we have it. So now we're going to do the same thing to our office equipment, okay? We are going to take a look here. So we have our computers, right, at $1,834.84, but we calculated an accumulated depreciation for $61.16. So accumulated depreciation for the computer, which gave us a credit of $61.16. So, okay, that will decrease the value there. Printer is still 378.87, right? Which we calculated accumulated depreciation to be 1263. Okay, so this is what we mean by when you do the historical value cost, right? When you do end up selling or disposing your assets, you will be including your accumulated depreciation. In this class, I did not teach that to you, so this is just a little whatchamacallit, a little thing that you would know later if you do end up pursuing accounting and learning more advanced level of accounting, how to include the accumulated depreciation when you sell your product or dispose it. So then it's at fair market value. Okay. So there we have it, $12.63 for the accumulated depreciation for the printer. Okay. Let's see, for the cash register, right? It's still $649.49, but the accumulated that we calculated was $21.65. So $21.65. So once again, we're going to plug in our formula for the office equipment. So we have $2863.20 worth of office equipment. So I'm going to go ahead and start off with my computer, subtract my accum, add my printer, subtract the accum, add my cash register, and subtract out my accum. And what should I get there?
I got 2767.76.
Excellent, right? It dropped down to 2767.67. Ugh, too much. 2767.76. Okay. Good. Continuing on with equipment, okay. Our coffee brewers, right, gave us a grand total of $4,505.29, which we calculated a grand total of 9620 for depreciation, accumulated depreciation. So let me see, equipment. So this was 96 $8,485.20. Okay. Our coffee grinder was a total of $4,145.57, which we solved. The accum is going to be 6909. Okay. So that's all for office excuse me. That's all for just regular equipment. So this one's going to be, okay, equal your coffee brewers minus the accum. You're going to add your coffee grinder minus the accum. Okay. And what do we get here for your total equipment?
$8485.57.
8485.57. Good. Right. Last but not least, we have our vehicles, which includes our truck for the 32,208.90. Okay. Which we calculated a grand total depreciation to be 257.67. So 257.67.
So this one is called adjusted because we're taking the accumulated depreciation and amortization off of the items.
Correct. We're marking them at fair market value or book value.
Okay.
Mm-hmm. Okay. So then my vehicles is going to be my truck minus my accumulated, which should give you a total of $31,951.23. Our prepaid accounts is still 665417, so we can leave that one alone. Okay. Our deposits is still 1700. Okay. And then our goodwill, right? We have accumulated amortization for goodwill. Okay. If you haven't typed it in there already, go ahead and type it in. I'm just going to go like this, amort for goodwill. Okay. This amortization for the goodwill was $11.67. Okay, which then will change your overall main account to be the 2100 minus the 1167, which should give you 2088.33. Right. And last but not least, no miscellaneous expense because that account is 0. Okay. So there we have it. A lot of accounts we added into the assets. Okay. All right. Let me know if everyone's ready to move on to liabilities.
I'm ready.
Yeah, go
Ready.
What was that, Kim?
ahead. Yes, go ahead.
Okay.
Move on to liabilities.
Okay, liabilities. Okay. So first thing that we have is accounts payable. Let's see. We definitely made changes to accounts payable, right? Because now we increase it because we had a bunch of bills coming in, and et cetera, et cetera. So here, my accounts payable account is now 6,547.86 cents. So 65.47.86. 65.47.86. 60. 65.47.86. Okay. 65.47.86. Our Visa payable, which we zeroed out, right? Because we received a bill and we're going to pay the whole thing off. So that means Visa payable is completely gone, right? We basically took that amount and we put it into accounts payable. Okay. Our notes.
Question.
Yes.
So we don't delete it, we just zero it out, but stays in the sheet, right?
In this case, yes, just because I don't want to mess up anything in there. But in this case, if you want to, you can feel free to clear it out if you like, because there's no value in there. But I'm just gonna leave it because I already have it in there.
And also, if we're going to be using this for the next month, that way we don't have to insert and retype, correct?
Correct. Correct.
Okay, thank you.
Mm-hmm. All right. So we still have
Notes payable.
notes payable for 64949, still there. Now we have payroll liabilities. Payroll liabilities, okay? I believe we added 2 more items into payroll liabilities, right? We have a salaries and wages payable, okay? So we're gonna have to insert that on top of employees FITW. So insert, we're gonna insert that one and one more because we have the commissions as well. Okay. Starting off with the first one here is salaries and wages payable. And then we have commissions payable. Salaries and wages payable is $340. And then the commissions payable was 271.78. So 271.78. Let's just go ahead and do a run through to make sure the rest of the numbers are the same, right? So here we have our employee FITW, which is still 4016. Right? Our OASDI is still $33.73. Okay. Our HI is still $7.89. Okay. Our FITW is 4161, or sorry, FICA, excuse me, 4162. Okay. Our FUTA is still 3264. Our SUTA is 1632, and our workers' compensation is still 740. Okay. So what I gotta do here is, because just to make sure that I pick up those two accounts that I just added in there, I'm gonna redo my equal sum account here. All right, and I'm gonna include my salaries and wages payable, my commissions, FITW, HI, Social Security, FICA, FUTA, SUTA, and workers' compensation. So that should change my value now to be $791.54. Okay. So then, right, we don't have any utilities payable. Okay. We don't have any unearned revenue, right? It's zeroed out, so there's no point to add that in there for any reason. Sales tax payable. Yes, did we make changes to this? I don't think so. So in this case, I have a total of $2,046.11. So no, that has not changed. Okay. We have a new account for interest payable. Okay. So therefore, you need to put that in there. So right under sales tax payable, you're going to click on row 63 for loans and insert a row in between. And we're going to name this interest payable, right? The liabilities that we owe to just random companies, okay, for borrowing money, which in this case, right, we have a grand total of 101.34. $101.34. And of course, because we have it there, we must also type in 101.34 for the interest payable in the blue column. Last accounts we have to update is going to be our truck loan, right? We received a bill, right? And now we must make a payment to it, right? In this case, right, usually when you make a payment to your truck loan, a portion, you're going to have to pay the interest first, and then everything after that goes to the principal. So in this case, right, our truck loan is now at a value of 28 44514. 28 44514. equity, we have not changed anything in equity, so your owner's equity should still be 30,000. Your owner's withdrawal should still be 3,000, right? That when we do our closing process, this is where we're actually going to make changes to equity. But for now, no changes to equity. Okay? Now we're going to dive into sales. Okay. Starting with the first one, I don't think we made any changes to sales, so let's just confirm that those values are still there. So sales for the regular coffee should still be $13.94.95. Okay, good. My Supreme coffee should be 14.
Sorry, you said 13.94.95 or 96?
Oh, 96, my bad.
Okay.
Yeah, sorry. My screen is just as small
Yeah,
as.
my pennies.
Okay. All right. Your Supreme coffee should be 14.36.40. That's right. Our medium regular should be 17.63 691. Yeah, these numbers should have not changed. So if you want to make sure that those values are still the same, okay, the 52.21.76. Yep. The 6503. Oh no, 60. Yeah, 6503.25. The 665577. Okay. And last but not least, your sales for large Supreme coffee should be 7524.44. Okay. Let's see, your sales returns and allowances should be your 1996. Okay, 1996. So that's still there. Okay. Your sales discount should be your 1,979 cents. So that's still the same. And let's see. The delivery income is still 300. And that's it. So revenues, we did not make any changes to revenues, but I just want to make sure that those numbers are still there. Okay. Cost of goods sold, right? We calculated a lot of stuff under cost of goods sold, right? We have the cost of goods sold for the ceramic coffee mugs, as well as cost of materials. So that means we got to insert of quite a few lines in here. Starting with the very first one is going to be for the cost of goods sold ceramic coffee mugs. Okay. I'm gonna go as far as also add. So I'm gonna do these ones first. So let's go ahead and calculate the cost of goods sold. So for the regular coffee, these should stay the same, right? It's still 14.0768. Okay. And the Supreme coffee should still be 14.8760. Okay. So the only number that we're going to be changing is going to be the cost of goods sold for the ceramic coffee mugs, which when we did periodic inventory, we solved to be a total of the 1183.84. Okay. So this is where you need to make changes to the overall main account of your cost of goods sold, because in this case, it's only including the regular coffee and the Supreme coffee. So I'm going to equal sum this, and I'm going to have it include the regular, Supreme, and the ceramic coffee mugs. And you should get now a grand total of cost of goods sold to be $4,079.12 worth of cost of goods sold. Okay. So this is where we're going to be inserting 5 extra lines in here, okay, because we need to now add in our cost of goods sold, cost of materials. So here, cost of materials, okay. And of course, that's the main account, so we need to add every single one. So we have it for the medium coffee cups, the large coffee cups, the sugar, and the creamer. Okay. Okay. So COM, medium cups, COM, large cups, COM, sugar, and COM, creamer. So here we're going to tally up our total cost of materials. Okay. So let's take a look here. Cost of the medium cups was a total. Okay, so it's a debit for $286.70. How much was the cost of materials for my large cups?
$351.63.
$351.63. Sugar was $43.20. $43.20. Okay. And last but not least, my creamer cost me $359.26. 359.26. Okay. So therefore, what is the total of my cost of materials?
I got 1,040.79.
Good. Good. Okay. Last but not least, we're going to go through all of our operating expenses. Okay. So we've definitely going to be adding a few things and making a few changes in some areas. Okay. Starting with advertising expense, did we make any changes there? Okay, it still holds 185 even. Okay. We need to insert bank fees because that's a new expense account we created. Right? Bank fees. Okay? Which was a total of $369.64. Okay. Our business expenses, go ahead.
I'm sorry. can you, I think I entered something wrong. Can you go back to your assets and bank?
Assets and bank. Oh, on the ledger or the
Yes, please. The general ledger. Yeah. Okay. I made a mistake there. Okay. Thank you very much. We can
okay.
go back.
hmm
Expenses.
So our business expenses, right? We threw in our petty cash fund. So how much is my business expenses now?
1282.78.
So 1282.78. Okay. My freight expense. How much is my freight expense?
0.
0, because we did our periodic inventory conversion entry where we zeroed out all these accounts. Now I'm going to leave it because, again, we will look into it again in the future. So I'm just going to leave it because I don't want to, I'm too lazy to delete it. All right. So next one we have here. Now what you could also do too is if you have those zeroed out accounts, you can just simply hide them so they don't appear if that's what you want to do. That might be a better way instead of deleting and then having to insert it again when you come across this freight expense. So you could just simply hide it and it won't appear on your screen. Okay. But I'm just going to leave it. Next we have is insurance expense. That should be the same for 195.83. Okay. Our labor expense should still be the subcontractor for the 1890 plus the temporary work labor for the $252, giving us a grand total of 2142. Our license and permit is still at $375. Okay. Our loss on disposal of asset is still $2,000. Okay. So this is where we need to insert our office supplies expense because we had to adjust our office supplies. So click on your payroll expenses, or I guess row number 98, right? And insert your office supplies expense. Okay? For the total amount of $70. Okay. Moving on to payroll expenses here. Okay. Payroll expenses, let's see. We made changes to salaries and wages expense. Okay. It is now 834. Oh, sorry, 884. Okay. And my commissions is 411.96. 411.96. Okay. And because we didn't do payroll just yet, your payroll tax expense should stay the same of $97.98. So therefore, it should automatically change your numbers here because we had the formula from the previous one. So we now have a total of payroll expenses to be $1393.94. Okay. Next we have is our purchase expense. What's my value, my purchase expense?
Isn't it 0?
It is 0. Okay. Even my purchase returns and allowances is 0. Okay. No purchase discounts, unfortunately. Okay. Rent expense is still $1,500. Okay. No travel expenses, no utilities expenses. Okay. And then we need to create 3 more lines to hold our bad debt expense, our depreciation, and our amortization expense. So we need to add 3 more lines in here if you haven't done so. Okay, so insert. I'm going to do one more, okay, to put in for bad debt expense. Okay, depreciation expense and amortization expense. Right? Starting with the first one for your bad debt expense. How much was your total bad debt expense?
$76.60.
$76.60. How much was your total depreciation expense?
$625.95.
$625.95. Last but not least, your amortization expense.
$11.67.
$11.67. So go ahead and redo your formula because you might not have included everything in here. In this case, I've included everything in here. So make sure you run your formula again because there's slight chances that by adding and inserting a lot of your lines in here could mess up your formula overall. Okay. And what do you know? Okay, I'm going to expand this real quick. What do you know? Let's take a look at my values here. So I ran my formula, making it right here to equal my debits and credits on one side and to equal the debits and credits on my other side. And I get a even number. I match at 0. Okay, I got 99,381.97 for my main accounts, and for my total sub accounts or just accounts in general is a total of $100,096.19 on both debit and credit. Okay, so yay, success! Did you guys get the same numbers?
Yes.
All right. Excellent.
You didn't, Sonia?
Well, somehow, the second column totals the same as the first column.
Now,
So my
yeah, because
Yeah, that's how it's supposed to be, no?
so my
they are not supposed to match because we separated our debits and our credits, right? In our main accounts, we added and subtracted those accounts in there. So in essence, your main accounts should not be exactly the same as your total sub accounts.
But I mean, the debits of the main accounts and credits of the main accounts is supposed to match, and the debits and credits of the sub accounts are supposed to match, correct?
Wait, say that again. The debits.
The debits and credits for your main accounts, which is your first and your third column,
Mm-hmm.
should match,
Yes.
and your
Yes.
second and your fourth column submatch, which is the debits and credits of your sub accounts.
Correct.
Correct?
Those should match 100%. Yes.
so I'm missing something somewhere.
Okay. How much are you off by?
$714.22. So maybe my formula is off somewhere.
Okay.
But I
All
don't.
right. We have time to go through it. Okay. Now we have time to go through it. So let's see. Let's start with the first account, which is bank. Did you get the 13,952.60?
Yes.
Okay. Accounts receivable 1455.35.
Yes.
Business supplies for 510.10.
Mm-hmm.
The office supplies for 80.
Yep.
The inventory for 541.59.
Yes.
Okay. Next account's going to be your furniture for 8,906 excuse me. 8,926.20.
Yes.
Okay. Your office equipment for 2,767.76.
Yes.
Okay. Your equipment for 8,485.57.
Mm-hmm.
Your vehicle should be 31,951.23.
Mm-hmm.
Your prepaid should be the same. Your deposit should be the same. Your goodwill is 288.33.
Yes.
Okay, so I'm thinking I think it was probably along the lines of the liabilities. Accounts payable is now 6,547.86.
Yes.
No Visa payable.
No.
No, okay. 64.49 for the register or the note payable. 791.54 for the payroll liabilities.
Yes.
Yes, okay. The sales tax should not have changed, so it should be 2,046.11. Your interest payable is now 101.34. Your loans is now 28,445.14.
Mm-hmm.
And let's see. Your equities should not have changed, so it should be 30,000 and 3,000.
Mm-hmm.
Your sales should be a total of $30,549. 49 cents. Good. That shouldn't have changed. So sales returns and allowances again should be 1996. Sales discount is 1,979. That did not change. Your delivery income should not change either. Cost of goods sold is now 4,079.12. That was including the coffee mugs. Your cost of material is now 1,040.79.
Uh-huh. Okay, I got it.
Perfect.
I didn't change my formula to include some amount that was in there, so I'm
Okay.
good now.
Okay. Awesome. Okay. All right. Awesome. Okay, so we are done because we panned out evenly with 0. So we did our accounting correctly. It was a struggle, but good, right? So, okay, so what we're going to do is we're going to stop here and take our break. And when we come back, we're going to go ahead and start doing our financial statements, okay? So, all right, so I'm going to call break here. It is 9:45, so 20 minutes. So please be back no later than 10:05.